Hi everyone, today let's talk about the GDP news and some currency moves. Then we'll get into all the usual data and charts. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So GDP came in a little bit better than expected, and that means it's likely that we're going to see a 25 basis point cut. I always thought that, but apparently markets were potentially pricing in that 50 basis point cut, and that's why the dollar was selling off super aggressively. And following that data, the dollar rose to a 1-week high. And if you've been following the channel for a while, the dollar has been cratering and we've been covering it the whole way. But now GDP rose by 3%, a revision up from 2.8% and higher than the previous quarter at 1.4%. So it seems less and less likely that we're going to see that recessionary effect that we've been talking about. I still think it will come eventually, but it seems like in the short term, we're still doing okay. Doesn't mean we're not going to get that 25 basis points in September. I still think that that is going to happen. But initial jobless claims fell by about 2,000, and that was at 231,000, a little bit of a revision from the 232,000. So overall, still seems like a relatively soft landing based on this data, and the 25 basis points should be a lock at this point. In terms of Fed futures, we were at a 35% chance of seeing a 50 basis point easing. That seems super high to me. I would have never put it that high. I think I put it between 5 and 10% the last time we talked about this, and I still think that that is the case. 25 basis points is what we're going to get, and now markets seem to be realizing that. Moving over to fear and greed, stepped up to a 58. Pretty interesting considering the price action that we've been seeing. 51 was yesterday's read. I think that was a slight revision from what we saw, but you can see this continues to grind a little bit higher here on the metric. Momentum continues to roll, still sitting in regular greed. Strength hovering here, still in this 3.6 area. Breadth continues to go a little bit higher each day seemingly, and that is back into extreme greed. Put call ratio has been rising. That's definitely been concerning. We haven't gotten through this kind of 0.8 area where once you get through there, you expect to see spikes like this one in January as well as in April. So we're still kind of hovering in this point where you could see a little bit of a reversal, but still expecting a little bit more upside to that 0.8 area. And then VIX still hovering, still elevated, spiked a little bit yesterday. I was expecting that to spike a little bit more here today, but it's hovering in neutral. And then safe haven demand continues to rocket here. Pretty interesting, still extreme greed there. And then junk bond demand still sitting in extreme fear. So clear divergence between the bond markets. People trying to squeeze yields out on this junk bond side, but expecting the mega caps to be basically as safe as government bonds. Moving over to seasonality, we were expecting a little bit of bullishness based on this metric. The markets looked terrible going into yesterday's session, and we thought that they were going to fall a little bit more aggressively today, but we ended up getting a pre-market rally, which was super aggressive, and then this almost came to fruition on some of these markets. So seems like seasonality is still playing a little bit of a role here into the end of the month. Moving over to earnings, we did get a couple here. So Lulu missed on the top line, beat on the bottom, pretty substantially actually on the bottom line. Best Buy absolutely crushed it. They jumped a whole bunch here today. Brown-Forman falling on both today as well. And then Dollar General absolutely missed it a lot. They fell a bunch. I think they were down like 30% or so during today's session because that came out pre-market today. And then Ulta also missing. So some of those consumer stocks not doing so great, even though Best Buy was able to hang in there. Moving over to the economic calendar, you can see that core PCE came in at 2.8 for Q2. That was pricing. We're going to get those numbers tomorrow. And then GDP beat on both of those. Pretty interesting there. Again, we already talked about it, but that means we're probably going to get 25 basis points in September. And then pending home sales cratering here, minus 5.5%. I wonder if that's because people see interest rates coming down and we want to wait till that September cut. And then we'll get the September cut and then we'll start to see those kind of pick back up again. Markets should have really priced that in by now, but it's hard to say. And then 7-year note auction coming in about 1/3% lower from the previous. And then like I mentioned, for tomorrow, CPI for the Eurozone, but the big one is PCE data coming in tomorrow, as well as inflation data from Michigan University, and then the consumer sentiment also going to be interesting. Want to see that continue to do pretty well. And then Atlanta Fed GDP. Moving over to Max Payne, stock price 554.40. Max Payne 555, still expecting a little bit of a fall closer to that 555 level, between 555 and 557. That is where we are right now, so maybe we get a flat finish, but to me, I think we're going to get a little bit more of a fall closer to that 550 level. Total options, 1.5 million, put call ratio, pretty high. So I don't think we're going to crater by any means, but I think a little bit of weakness tomorrow makes sense. Moving over to the S&Ps, you can see that the market continues to roll to the downside. We got a big head fake early in the session, got all the way up to that trend line, almost to the penny, touched it, and then immediately fell all the way back down, finishing completely flat, 0% move on the day. Momentum continues to roll to the bear side. This continues to look very weak to me. I think we're going to continue to go lower here. RSI also breaking below the SMA for the first time. This SMA is still trending up, so generally those retests should be met with a little bit of buyers, but you could see a move like this where you get a breakdown. This was still trending up when it broke, went a little bit lower, then we got a retracement. So that's certainly a possibility. Just something to keep in mind, that trend is still slightly positive there, despite the fact that markets continue to look quite bearish. And then looking at the short-term charts, you can see huge selling after hours, hit the 200, and then we got a massive gap higher into the pre-market, continued that rally into the mid-session, and then on that 1 o'clock candle, gave it all back, 0.77% down on that candle. S&Ps basically flat as well, 0.01 to the upside. After hours, getting a little bit of a pop there. It's also a little bit interesting that we got a higher low setup off of this previous low. And then technically this was a higher high from this previous high here in yesterday's action as well as the Tuesday session. So something to consider. Maybe we get a little bit of a change in structure. If this gets a little bit of a follow through, your next upper level would be 565.16. Momentum says probably not. Volume was also selling. Daily chart still looks terrible here on the S&Ps, but something to consider on those short time frames for you shorter term traders like myself. Looking at the Tasty charts here, you can see that 8 EMA on the S&P still hanging in there at 557.77. Cannot seem to close below that level. Once we do, I think markets are going to break down a little bit more aggressively, but so far that has been hanging in there as a critical zone. And then looking at that 4-hour chart, we are still in bearish conditions. The rally up did not hit that ATR resistance. That was at 564.39, and then we sold off from that first ATR band, touched the first ATR band to the downside. Now we're at the midpoint, still expecting this to sell. Next price target on the 4-hour would be 556.02, and if that were to break, then you'd be looking for that 55 EMA all the way down at 552.76. Moving over to the NASDAQ, not as positive here, 0.13 to the downside, but we still got that bigger move up, retested that trend, hit those two EMAs, 55 and the 9, and then sold off to the lows. Momentum still bearish, RSI still broken down here. Still looking at the 21 EMA as a price target. This looks even worse than the S&Ps, continuing to shed here. Still looking at a potential for about a 1.5% down move. Whether that happens tomorrow or not still remains to be seen. And then moving over to those short time frames here on the Qs, you can see the next level there is 468.05. Touched that yesterday on the after hours price action. Touched that yesterday at the low of the day. After hours broke through there, almost got to the next level at 464.50. And then we started to see that slight rally at the end of the after hours. Huge gap up right to that 477.69 level. Hopefully you didn't get head fake too hard on this. If you were watching it, should have been looking for that key resistance here. We've been watching it. You can see that was clear resistance back on the Tuesday and Wednesday sessions. Tapped that level and immediately sold. So I was expecting a sell and I did trade that fairly well. But now we did get that same kind of setup, low, slightly higher low here. The high was not a higher high, so it's not exactly the same as the S&Ps if you compare that pre-market price action yesterday, but we're finding a little bit of a base, getting a little bit of a rally into the end of the session. Maybe this starts to perk up here. It's also interesting to see how high it got above the 200. Last time we touched the 200, we did reject from there, and today we pushed right through that. So a little bit of buyers coming in, something to watch here, potential for a short-term push into tomorrow's price, into tomorrow, despite the medium-term downtrend that we're watching. Moving over to the Tasty charts here for the Qs, you can see that we did hit that lowest ATR band on the 4-hour chart. We talked about that yesterday being a point where you could see a little bit of a bounce. Sure enough, we did. We got a bounce up here, hit the midpoint, and then sold off. Remember, we're still in bearish conditions. Didn't get anywhere near that ATR trailing stop. That's at 480.65, and then we sold off from there. Hit the 144, so that last EMA is hanging in there as a potential support. Touched that at the end of the session. We're seeing a slight rally after hours, all the way up to 472.17 at this point. So we'll see how that plays. Maybe this starts to see a little bit of an up move. Still expecting this to stay in bearish conditions, though. You can see the ATR bands are continuing to roll to the downside. Did see a little bit of volume coming through, but most of it was on that selling candle. So nothing crazy here on the Tasty charts. Moving over to the Russell and the Dow, the Russell did gap up like everything else, but then it dojied completely flat at the level 218.78, closed 2 pennies above it after hours, seeing a slightly bullish move. So this trend is still intact. Held the 9 EMA yesterday, continue to see that up move here today. Did touch the trend, did reject from there, but we'll see how it plays. Seems like we're going to get a little bit more up move here tomorrow. I still like the Russell. I've been bullish on the Russell, mostly from the macro perspective, and right now the technicals do support that. And then looking at the Dow, positive day there as well. New all-time high on the wicks, also a new all-time high close. Trend resistance is still that 418 area. Let's go ahead and extend that out a little bit. So still sitting above the trend, looking for that next one at 418.10. Moving over to the Mag 7, maybe this is explaining why markets are holding up a little bit better. Mag 7 already hit VWAP, already hit the 21 EMA. Momentum continues to roll here. RSI continues to look bearish, but the 21 was what we were looking for. Touched that 2 days in a row, found a little bit of a bounce from those 2 days in a row. After hours, seeing a slight bounce. Doesn't mean it's going to hold up. We saw a huge rally here today. Hit the 55, hit the 9, hit the next level at 265.08, and then ended up giving all of that back once again. So there's still sellers in the market for sure, but we're in a zone where we talked about some support coming in on the Mag 7, and that seems to be holding up. And that seems to be holding up markets, at least in the short term. Moving over to Apple and Microsoft. Apple continues to hang in there. We talked about this being a bullish structure. Thought yesterday maybe we could see some follow through down to that 224.36 level, but then we got a huge gap up. Hit the next level at 230.28. Huge wick above it. High of day was all the way at 232.92, but then we closed below the level. Maybe this sees a little bit more rally here. Still looking for that gap fill all the way back at that, all the way back to the 16 July candle. The close there was 234.82, so that would give you another $4 of potential upside there, 450 or so. Momentum did swing back to bullish. RSI back to bullish, so Apple showing some strength. Makes sense why the Dow is going higher, and something to watch in tomorrow's session. And then looking at Microsoft, managed to stay barely positive, about 0.5%. Zone of support was the 200. We hit that yesterday, tagged it almost again here today. Still in this kind of consolidation zone, waiting for clear direction. Once the 200 breaks, I think this is going to go much lower, but right now we are finding support at that at 410.43. Moving over to Tesla and NVDA, you can see Tesla found a little bit of support in here. We talked about this being an interesting zone, the 200, the level at 203.80. Sure enough, it's hanging in there. We're still in this triangle pattern, waiting to see that clear direction. So far, it hasn't happened. Momentum and RSI are slightly bearish, so based on that, you would expect a breakdown, but could go either way right now. And then looking at NVIDIA, we did get follow through on that move yesterday. It did try to rally back, almost filled the gap, and then sold here pretty aggressive right to that 21 EMA. So hit the price target there at 117.01. The next level we were talking about was the gap fill here to that 109.13 level. That's all the way back down here to that 12 August candle. Still think we're probably going to get there. Clear consolidation, clear breakdown after the up move. Again, could be a zone of support with the 21 in VWAP, but based on this candle, you would expect more follow through. Ended up down 6.38% after being down 2% yesterday, so pretty good move. Still think there's a little bit more in the tank on NVIDIA. Moving over to staples and discretionaries. Staple touched the 9 EMA. Now we'll see if this trend is going to hold. Momentum has broken down pretty aggressive. RSI also broken, so probably going to see some more pullbacks. Trend support at 81.08. It's been massive, probably going to pull back. And now looking at discretionaries, managed to stay positive on the day, 0.12%, but we got back below all of these levels after trying to gap above them. So still selling price action, momentum bearish, RSI still bearish. Moving over to oil and gas and financials. Oil and gas continues to be a decent place to be. Consolidating after this up move, probably going to push higher in my opinion. It's been in a little bit of a downtrend, but I think structurally that's probably going to change here. Momentum bullish, RSI bullish. And then looking at financials, continues to be a straight rocket ship. 0.89% today, momentum bullish, RSI bullish. It is overbought now at 71.9, but this is price discovery and it continues to look very strong. Moving over to the dollar, got that second day continuation here today. Usually you get at least 3 of them. Still looking for that last push here to that 102 area. Momentum continues to swing to bullish. RSI continues to look good here. This has been an extended down move. There's plenty of room for a retracement even within the downtrend structure. So dollar continues to look pretty decent here. This should start to weigh on equities. It didn't weigh too much here today, even with the 0.33% higher that we got on the back of that GDP news and the unemployment data, but still expecting this to go higher, and eventually that will weigh on stocks. Moving over to yields, these continue to get closer and closer seemingly every day to that normalized condition. 2-year at 3.89, 10-year continuing to rally here at 3.86. So just 0.03% before we get into normalized condition. 2-year continues to hover in the zone. 10-year continuing to swing higher. I think this could potentially get all the way up as high as this 4.1 area. Let's go ahead and extend out that trend line. That trend is sitting around 4.04, so somewhere in this zone. 55 sitting there at 4.1, so makes sense. Momentum bullish, RSI bullish on the 10-year yield. Moving over to the VIX, you can see we're still in this kind of consolidation. Thought we might get a little bit continuation off of yesterday's candle, but we pulled right back. We're still slightly elevated from where we were for basically all of May up until July. That was in the 11 to 12 zone, so we're still hovering around 15.5. Still think this is going to go higher, at least at some point. It's in a consolidation now. That can take a while. You can see these long extended periods at the same zone before you see spikes, but it is still elevated, and I do think it's going to go 20, maybe as high as 22.5. Moving over to my accounts, I made money on the day. As I expected, those calls came in pretty handy yesterday and made a bunch of money here today. I really didn't change my positions until the end of the session today, so I was able to make money on that last down move as well. I did also add some money to my account, so this is not all gains, but still made some money, about $1,000 on the day. And then looking at my individual positions, still got this covered call for the Russell. This expires tomorrow, so finally get to roll that out. It's still in the money. Max profit is still 20.47, so have a little bit more upside potential there. It's rallying after hours. Of course, I can roll it tomorrow since it does expire tomorrow. Should have plenty of room to roll. And then looking at the Qs, that is also jumping pretty decently after hours up to 472. I actually whittled this position all the way down to just the covered call position. I also rolled that down and into 470 as markets continue to crater, so I wanted to stay in the money on that. This expires next Wednesday, so there's still 6 days from now. Of course, you got the weekend in there, so it's really only 4 trading days, but max profit on that is going to be 474.44 with that new position. So again, still some decent room to the upside. Even if this continues to rally, that's about $2.40 per 100 shares, so about $500 potential profit left in this position if it were to rally to that max profit position. And you can see the deltas are actually pretty high there at an 80 delta, so still pretty bullish, especially considering the structure that we're seeing. Could be a bit of a fake out, but that higher low on the hourly chart means that we could see a little bit of an up move tomorrow, and I wanted to give myself room for that potential. Let me know down in the comment section what you think of markets. Did you get whipsawed today on that big up move and then down move? And then how did you position going into tomorrow's session? Do you think we'll get a slight retracement? Do you think we'll get a little bit of a rally? Or will we give all of those gains? Or will we make another new low after yesterday's session? Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.